Hello everyone, Sam Tenney here. Hope you're doing great. Wanted to share a few thoughts. Happy Memorial Day, and we're grateful for all those who have sacrificed for our country, those in the past and those who are currently doing so. Grateful for this wonderful land we live in and the freedoms we enjoy. Wanted to share a personal thought, a personal story, give you a little bit of insight into who I am and my personality. Around 29 years ago, I was playing basketball for Heritage High School in Littleton. We were playing Regis, and we ended up in the first 5-6 minutes of the game, due to my aggressive nature, I ended up getting my third foul. It was taken out of the game and had to sit on the bench until the second half. My personality was that when I got back in at the beginning of the third period, I got my fourth foul within the first minute or so. Had to sit down again, but on my way off the court, I got a technical foul. And then again in the fourth quarter, or when I returned to the game, on the inbounds play, after not even playing in the game, my aggressive nature, I got my fifth foul, fouled out of the game, and ended up getting another technical foul. So I played less than 10 minutes in this high school basketball game and ended up with 7 fouls. Many of you may not know that part of my personality. I was a little bit of not only aggressive but angry basketball player in my youth. Now, how does that relate to you and your investments? When we look at investments, you can invest in a lot of different things. First, and probably the greatest return, would be investing in yourself, whether it's your own health and education or family, or your future, those things that will traditionally give you the largest return long term. Next would be if you were to start your own business and be an entrepreneur and do something like that. That's where you can have a great impact and concentration of wealth long term. Now, what most people have after those two things would be maybe real estate or investing in stocks. We believe those two provide some of the greatest long-term returns. I wanted to give an object lesson, so here it is. If you were to start a mask company, and who knows how long that mask company will be productive, and it seems like it could be a long time right now, but hypothetically, let's say you made $1 million of profit each year. It's a lot of money, and your business would be worth something if you wanted to sell it to someone else. Typically, when you sell a private business to another person or entity, they'll do their due diligence and come up with a number, but typically it would be 3, 4, 5, 6 times what you're earning or what your profit is. And there's a lot of different factors, but let's say you were to get that kind of valuation for your business. Now, what makes the stock market unique and special is that typically the price of a company stock, a publicly traded company stock, is about 16 times their earnings. So you can see going from 3, 4, 5 times selling it to a private company versus 16 times when it's a publicly traded company. That's a huge advantage. And the reason why public companies trade so much higher or sell for so much higher is that they're liquid. You can get in and out of them at a moment's notice. Much of the public information that you need to make a decision is available, whereas a private company, that's not so much. So it's a great tool for capitalism and for wealth long term. Certainly there are problems with it as well, but I wanted to give that example to also illustrate where we've been recently with the stock market. When historically the 500 largest companies in the U.S., if they trade at really 16 times their long-term average, currently or in the past year, they've been more like 20 times. So if you're in our mask example, if I can sell it to a guy down the street for $3-4 million, but I could sell it in the stock market traditionally for 16 million, but in January I could have sold it for 20 million, you would say that's kind of expensive. Now, we've gone through what we've gone through with this virus, and we don't know what the final outcome will be. We do know we'll all survive and we'll make it through this. But what's interesting is companies' earnings have come down and stock prices have almost got back to where they were. So it's very interesting because now you could say what you're getting as far as a price compared to your earnings is even higher than it was in January. So that's where we get concerned that we may be a little overvalued and it may be more expensive than it really should be. The stock market could be pricing in a perfect return of earnings where over the next few years, earnings get back to where they were projected to be before the virus. We do think that will happen, but it will take some time. Or the stock market could have already got ahead of itself. The reason I bring this up is that in the end, your experience with your investments, whether it's stocks or real estate or bonds, matters, and how much they grow and what they do in the meantime as they grow, that experience matters. What our experience has taught us is that your experience through the ups and downs impacts your decisions, your emotions, and long-term lifestyle. And we want to make sure we stay focused on the plan and the process along the way. We want to make sure that you stay in the game and that you don't foul out figuratively. God bless you and have a great day.